Good morning. Welcome everyone to a corporate update following our announcement this morning of a successful institutional fundraising in support of the next phase of growth for Seascape Energy Asia. In conjunction with the fundraising, we believe that it's important to give Seascape's wider retail shareholder base an opportunity to participate in the offering on the same terms as the institutions. This will be carried out via the Winterflood Retail Access platform. Please see the news section of our website, which includes important disclosures related to the fundraising and full details in terms of the retail offering, which is anticipated to end on the 26th of March, 2026. Note that this presentation has been pre-recorded due to regulatory requirements and is not, nor should be construed as, investment advice or any solicitation to purchase securities in Seascape Energy Asia plc. I direct you to the disclaimer included at the beginning of the presentation, a copy of which can be found on our website. In receiving this presentation, you'll be taken to have read and accepted the contents of that disclaimer.
Welcome everyone. I'm James Menzies. I'm the Executive Chairman of Seascape Energy Asia, and we'd like to take you through this presentation about our next phase of growth and what lies ahead for Seascape as we look forward to 2026 and move into 2027. We'd like to highlight some of the major events, the major catalysts in the company and our activities that you should be looking out for. Moving on from the disclaimer, we are unique in being the only pure play E&P company with focus purely on Malaysia anywhere in the world. So to play Malaysian upstream through capital markets, we're the only place you can do that as far as we are aware. And what we've been good at to date is really building a portfolio of gas assets. That's what we've been focusing on for the last few years, is accumulating positions around both East and West Malaysia and bringing partners into those projects. So we've been successful at all of that, and that's what's really been helping grow the value of Seascape. Here we call it a first mover advantage. I would say that's probably a bit strong. I think we definitely took advantage of a time when I think Malaysia and particularly Sarawak was a little bit out of fashion, and to a certain extent had a bit of luck. But since that time, of course, it's become very fashionable and a very hot address. Particularly Sarawak, which has seen phenomenal drilling stats and much more attention from the majors. You know, we've seen Total come in to the basin. We've seen other heavyweight players pick up acreage in Sarawak, and now Peninsular Malaysia, of course, is coming into focus, particularly with the most recent rounds that have been announced by the Malaysians. As we look into 2026 and 2027, these are the highlights. We have a flagship project called Tamaris, which we're going to talk to you about. We're looking to expand our core operated position around Tamaris, and we think about that as a potential new gas hub for the future in an area which is access to a market which is starved of gas. Secondly, we want to bring in a partner into Tamaris. And so bringing the strategic partner, which is going to help drive that project forward, is extremely important to us. And you know, we'll talk to you a little bit about that now. Then, as we look at the back end of the year, we're looking at taking FID. That's the decision to go ahead with two projects, both in Tamaris and in Dewa. And in doing that, we'll convert a large proportion of our contingent resources into reserves. And that's an important step for the company. And then lastly, as we move out into 2027 from 26, all eyes are going to be on Kertang, which is our giant gas prospect in deep water Sarawak, where we're getting carried on 2 wells at no cost to Seascape. And that will be a huge catalyst for us and something we're very much looking forward to. Recently, I mean, I'm not going to go through everyone on the board, but obviously you heard from myself and Nick quite frequently, and Pierre. But on our non-executive team, Mike Buck has recently joined us, and Graham Stewart is going to stand down at the AGM in June. Mike is someone that Nick and I have worked closely with, both in Salamander and for me back in Lasbo days. And I think as the company becomes more operational, Mike's experience is going to be invaluable for us. So we're very, very pleased to have him on board. I'll hand over to Nick to take you through the highlights of what's going on.
Thank you, James. Good morning, everybody. Again, here on this slide, you see a map of our existing portfolio across Malaysia. And I think one of the big takeaways from this whole presentation you should have is that this is a gas-weighted portfolio. Obviously, with current events going on, Asian gas into Asia is a huge thematic, and we think it's going to be very important going forward. So our 3 PSCs, which we put together over the past few years, are on the screen in front of you. So we've got the Tamaris cluster, our flagship development, which will be moving forward over the next couple of years into production. It has a wonderful mix of risk and reward on it, including several very large exploration prospects, and indeed the wider area is very, very exciting. Across the rest of the portfolio, we also have a spread of risk and reward. We've got Block 2A, which is our giant Kertang prospect, very exciting, which will be drilling midway through next year, and the Dewa cluster, a non-operated asset for us, which has production expected over the next couple of years, still at a material level to us. As we stand today, the business has around a £50 million market capitalization. We have around £6 million in cash on our balance sheet at year end, of which 2 was restricted for bank guarantees. And this indeed was held against our work programs on our assets and is prior to the institutional fundraise announced today. Over the past few years, we've also put together a significant amount of resources in the portfolio. So we've got 2C of 64 million barrels of oil equivalent, of which it's mainly gas. And you'll be hearing how that will be converted into 2P reserves as we move forward. We also have a huge amount of prospective resources across both Tamaris and Block 2A. Speaking of the gas weighting, one thing that is very, very important to understand around Malaysia, for those of you who do not spend as much time there as myself and James, is that Malaysia, with its growing economy, with its young aspirational population, is very structurally short gas at the moment. As you can see on that chart on the right, we've got a situation, especially in Peninsular Malaysia, where they are currently importing LNG to meet gas demand. This is a function of 2 things, really. The first is that there's been a huge amount of data center growth in Malaysia as they seek to position themselves as a hub of Southeast Asian compute, simultaneous to which they are decommissioning coal-fired power stations. As you can see on the left, we've got in Malaysia still a significant amount of power generation being generated from coal, which is something we find strange here in Europe, but it's still very much a feature out there. So all of this together is driving a huge amount of forecast growth and demand, leaving very structurally short the gas market, both in Peninsular as well as over in Eastern Malaysia. We see a need for more gas into the Bintulu LNG plant, one of the largest LNG plants in the world, which ships most of its LNG up to North Asia, which again will be increasingly important. So what's going on in the business and looking forward to our next phase of growth, which you'll be hearing about today between James and myself. So number one, we're going to continue to build the portfolio. You're going to hear today around how we would like to extend our acreage position in and around our Tamaris PSC, really helping us capture the overall play, which James will go through in more detail. As part of that, we also want to be introducing a strategic partner into the asset. So we're running a farm out process as we speak, and we'll be seeking to conclude that during the first half of this year. There's been a huge amount of industry interest from everyone from super majors through to national oil companies through to mid-sized independents, with a common theme being people looking to come into Malaysia because they see it as attractive as we do. All of this is into these short cycle assets, which are expecting first gas in 2028. with 2 FIDs in the second half of the year, both on Tamaris and on Dewa, giving us net production potential of 20,000 barrels of oil equivalent a day, again, mainly gas, and this is a significant amount of production. All of this is leading up to our giant Kertang well, which will be tested in the middle of next year. The rig tender is underway, and we're going to have some news on that in the coming months. Perhaps I'll hand over to James now, and he can go technical.
Very good. Okay, well, let's start with Tamaris, which you've heard us mention a number of times already. And just by way of reminder here of where it's located, it's in Western Malaysia, in the southwest flank of the Malay Basin. And on this map here, it's shown in bold outline, the block location. And what you can see on the left-hand side of this map is the coastline of Peninsular Malaysia and the town of Kertang, where all of the Malay Basin production is received. So this map in the middle shows the Malay Basin proper. So all those green and red blobs are oil and gas fields in the Malay Basin, and you can see our block located there to the southwest of it. In fact, you can see pipelines going across our block towards Kertang. The Malay Basin is a well-established, I would say quite mature basin. It's one of the biggest producers in Southeast Asia. And at this point in its evolution, some of these fields, or the bigger fields, are midlife, starting to come off. It does mean that we have space in pipelines, so plenty of ullage, as we call it, available to get our gas in Tamaris to market at Kertang. When we look at our block Tamaris, on the right-hand side, we show an image from the 3D seismic. And what we see is two gas fields, Tembakau in the southeast and Mengkuang in the northeast. And we have plenty of well control. We have 3 wells, 2 on Tembakau, 1 on Mengkuang. We have all the test data. We have core. We have lots of 3D seismic to calibrate using the well data. And what we've noted, and I think what we've shown previously, is that the seismic expression of where we see these gas reservoirs on the 3D, these channelized features, is very strong. You get these big, strong amplitude bursts where you have gas-bearing sandstones. And the reservoirs themselves are Miocene age. They're channelized features. So you can see on this 3D image some of those sinusoidal channel shapes that wander across our block. And in general terms, thinking about the geology, these channels were wandering from west towards the northeast, from the southwest to the center of the basin. At the time these were laid down, the area was quite flat, so they kind of meander gently across the way. But they do stand out very strongly on the 3D imaging. And we can see from the well data that where we see channels that don't either have the sand or the gas, it's very dim, so it's blue. Where we do see the signature, the gas sand signature, it stands out red. And so you can see on this image on the right, not only the fields, but also extensive inventory of prospects across Tamaris, which we have documented and had audited independently. And that provides, above and beyond the fields themselves, 950 BCF of prospective resource. And that's been one of the features, I think, that has helped grow the value of Seascape in identifying and documenting this kind of upside. So when I think, as a slightly broader point here, is when I think about what Seascape is good at, there's a couple of things that Tamaris exemplifies really for us. One is the subsurface. You know, we are a company of geoscientists, and I think one of our skills is finding things that look by other people. This is a play which we're following here. It's largely a stratigraphic play. We know it works because of the well data, but all those fields in the Malay Basin that you see on that map, these are structural features. This is the way basins are explored. People drill the bumps first. It takes a while before people start looking for the more subtle features, and particularly the strat plays. They come later. They can be very, very large. So, you know, we have our eye in on this play. And I think, you know, the guys have done a great job of this. It also highlights the second, I think, facet to Seascape, and one of our other skills, which is actually getting things done with the Malaysians, working hand in hand with the regulator to push along projects, to capture acreage, to work up prospectivity. You know, we work very well with them, and they're extremely helpful. As Nick was saying about the gas market, you know, they need gas, and so they want people who can come in, get this work done, and get things moving. So they're very keen for us to start drilling here as soon as we can. To that end, let's have a look at Tembakau, which is of a size that's absolutely commercial. I mean, 246 BCF for the field itself. On the left-hand side, we're showing an outline of the field from the well data, from the reservoirs in red. That is the Tembakau field. And we're showing where we envisage placing two simple wellhead platforms. And the circles are showing you the well reach from the platforms themselves. So that's where we can drill. So we would envisage drilling up the gas field, but also in yellow, we're showing you the near field exploration around the field itself. And what this means is we can drill those prospects from the platforms. We don't need a standalone drilling rig to come in and drill those. We see about 120 BCF of near field, very low risk exploration that we can do from the Tembakau platforms. The way we will develop it is shown on that schematic. So we'll have the two platforms. We'll go via what we call a PLEM, then a 70-kilometer pipeline to some third-party facilities. We've identified where that is. That's where the gas processing and compression is located, and that will then send the gas to market. The PLEM is shown here. It's important because we envisage finding a load more gas in this block. And the PLEM allows you, it's basically a pipeline manifold that sits on the seafloor. It allows you to plug in from new discoveries that will go into the pipeline to the facilities and to market. So we're sizing this for success. You know, we think there's going to be a lot more here above and beyond just Tembakau. On the production profile, or the indicative production profile, you see Tembakau will deliver around 100 million standard cubic feet a day on plateau. And the near field exploration, maybe another 30, 40 million cubic feet a day. So yeah, it's very, very material production that we're looking for from these assets alone.
Perhaps before we move on, I think it's worth pointing out that the 70-kilometer pipeline going to the third-party facilities will be sized so that it can take maybe double or even triple the amount of production you see on that chart there. So again, this is really, we are sizing this project for success and to meet that huge amount of demand in Peninsular Malaysia.
And we are looking to take FID on this at the back end of the year. It'll be a third quarter going into fourth quarter time frame. Okay, so let's look at the play where we expect to find these prospects. Obviously, we've highlighted a number of them in Tamaris itself. And as I mentioned, the channel systems are moving from the west to the north into the basin center. And that kind of says to you, you know, we would expect to find more prospects to the north of Tamaris. And indeed, when we look around outside of Tamaris and into the block 507, which surrounds Tamaris itself, we do see analogues to the prospects we're mapping in Tamaris. So on this map, we're showing three areas that look highly prospective. When we look at the 3D, you know, we can see the same amplitude brightening over there on the left-hand side on that image. Interestingly, on that image, you can see the edge of the 3D data. So there's a little triangle in the top right-hand corner. There isn't any 3D seismic in that area. There is some 2D seismic, but no 3D, which is of interest, actually. I'll show you for why in 1 second. We also see prospects that straddle the block boundary between 507 and Tamaris, which, you know, if they were going to be drilled and developed, it would be quite nice to have the same ownership group either side of that boundary. And 507 itself came up in the bid round in 2025. So it's, it has not been awarded yet. So it is open. And of course, it's been no secret that it's of interest to us because we see it as an extension of the core play that we hold within Tamaris anyway. And of course, we feel that we've done more work on this. We understand the geophysics, the seismic, the stratigraphy, possibly better than anyone else who may be looking at this. And maybe just as a last point on a teaser of this is Menkwang up in the northeast corner of Tamaris, which we have regarded as being too small really at 30 BCF or thereabouts. But it does sit right on the edge of the 3D seismic data set. And when we look at the 2D, we have mapped out at the same level where we see the gas sands in Menkwang, further prospectivity that sits in 507. And we showed here as this yellow area on the right-hand side of those three prospects in 507 itself. Our suspicion is actually if you acquired 3D over all of that, you would find that Menkwang and that prospect probably are one and the same thing. And there's a strong likelihood that Menkwang may have tested the closure at the southern end of a much bigger feature, which, getting my eye in just on the size of that, aerially the size of that prospect, looks like it's going to be bigger than Tembakau itself. So to us, this looks like something that we could definitely do something with, and we're quite keen to increase our position around Tamaris and capture the rest of this play.
Again, it's probably worth pointing out here that the route for the pipeline is going to be heading up in that direction to the north, sort of bringing into play these other potential prospects or Menkwang as it may be extended. And indeed, that was one of the things you mentioned before, James, with the PLEM being able to tie things in quite easily. Just sort of thinking ahead towards a wider area and thinking why this could really be a TCF plus gas hub here in Peninsular Malaysia.
Okay, Dewa, I think not much to report here. Obviously, we're a junior partner. Our operator is Enquest, who are progressing this. As we've described before, we have 12 fields and discoveries, gas fields and discoveries on the Dewa block. Not all of those 12 look like they'd make a development, but we're high grading, half a dozen of them. And this is going to be more of a phased development. So we're starting with D41 and D41 West, which is being worked up right now. We envisage one wellhead platform here. So it's probably going to be a little bit cheaper than our Tamaris development, but probably many more slots on it for drilling. Again, we would tie in locally, so 45 kilometers to facilities which would get the gas ultimately to Bintulu LNG. And, as we're seeing LNG, the LNG from Bintulu goes to buyers in Japan, Korea, and China, who, as Nick said, it's highly topical at the moment, those buyers and, what they're suffering with events in the Middle East. But so, this is highlighting the importance, if you like, of this kind of activity and these kind of assets. But again, looking to take FID back end of the year. At that point, we'll be able to book reserves, both for Tamaris and for part of Dewa. And so we should see 2P reserves, which the market, well, we would value differently. I think a reserve is a barrel of reserve is definitely more valuable than a barrel of contingent resource, and so there's a large amount of booking that we can do from this activity. Then when we go into 2027, we're going to be drilling Kertang. I think all the good work we're doing in Tamaris and surrounding acreage and Dewa will be put on the back burner, rightly or wrongly, because once the market starts looking at this, it's going to be difficult to talk about anything else. But we have described this, in depth many times before. But now they're out looking for the rig. We're not entirely sure when it's going to be drilled. We are imagining it's the mid-year. It could be a little bit earlier, could be a little bit later, but that's a good time to think of it if you had to have a date in your head. It's 9 TCF independently assessed in the mid case. It's multiple horizons. The seismic line we're showing here is one of our favorite seismic lines. It shows the gas chimneys, it shows the gas charge into the shallower layers. It's a very pronounced relief. And of course, it's a lookalike to other giant fields, gas fields around Sarawak, which are either in development, production, and are operated by these large companies. We have 10%. It's fully carried, all costs on 1+1. So that's one firm well, and then if they drill another well, we'll carry on that as well. The rig costs, the cost to drill the well is going to be north of $100 million. Depending on the amount of downtime and geological investigation activity they perform, but it could be up to $120 million. So that's a lot of money that we're saving through having this carry, and our shareholders are going to get exposure to drilling the biggest undrilled prospect in Malaysia at zero cost to the company. So, buckle up and enjoy the story. Nick.
Thank you, James. So look, just very briefly, we'll tie all this stuff together from what you've just heard about the asset base. So as James said, on the left-hand side there, we've got our resource base there, split into both contingent and unrisked mean prospective resources. Those contingent resources will be moving forward through the development process over the next really a couple of years, but the first milestone for those will be in the second half of the year when we reach FID on Dewa and Tamaris, and those resources will be converted into reserves. We think those should attract a much higher valuation to them because of their certainty and because they're on that track to production. So that'll be very exciting. Not all of those will be converted. We think a high percentage of them will. As you saw, Mengquang, currently there's no development plan there, and some of the secondary fields in Dewa won't be converted right away. But we were thinking somewhere around 75 to 80% of those 2C resources will be converted into 2P reserves, subject obviously to an independent review. On the right-hand side, you see the mean prospective resources, unrisked, of course. Those are very, very material business like this. And what I think is great is that they're both in Tamaris, which you saw has really a range of risk and rewards. So some of those near-field things were up to almost 60% chance of success. And 2A is more in the sort of 20-25% range, depending on which horizon. So a huge amount of prospective upside there. And what does that translate into in terms of production? Well, you can see on the right-hand side there, where we think this is going for production. We think Tamaris and Dewa will both be on stream in 2028. There, we're just assuming a mid-year sort of start for both of those. And the productive capacity at our current working interest is kind of between 10 and 20,000 barrels of oil equivalent per day, with that opportunity to step up with additional exploration success and indeed additional capacity at Dewa coming on. And so to put this in context of our peer group, or at least the peers we like to look at overall, you can see that 10 to 20,000 barrels of oil equivalent a day is a lot. I know some of those names have been in the news recently, and a lot of those players have been ramping up production through acquisition. We've gone more of a greenfield development route where we think that delivers the most value to shareholders, of which we are very large shareholders in this business ourselves, and we very much are driven by increasing that value per share. And you can see across the spectrum there, we will be a significant producer within the next couple of years, assuming everything goes according to plan. So all very exciting times ahead between the production, the field developments, the exploration on its way. So lots to look forward to. So just to tie it all together, what to look forward to from Seascape in the coming months is we're hoping to capture additional acreage around the greater Tamaris area. That really is our flagship development at the moment. And in capturing that whole play is, we think, crucial to unlocking the value in the overall area. And that includes bringing in a strategic partner into the greater Tamaris area. That process is currently underway. We can't really talk too much about it, but we hope to have a conclusion to that during the first half of the year, with a huge amount of interest from a wide group of people. This is all, in support of our first gas, likely in 2028, with those FIDs towards the back end of the year on Tamaris and Dewa. So these are very short cycle gas developments, again, into these gas short markets. All the while, we've got Kertang on its way, with the rig being booked towards the middle of this year and drilling anticipated in the middle of 27. So exciting times ahead. Thank you very much. As mentioned, all of the news is on our website. You can access the press release, which has details around how to participate in the retail offering, along with all the key terms and conditions. Thank you very much.